Okay, once again a day in which minor consolidation or dip was bought into, and the bank nifty is really leading from the front today with support from the IT index as well. Midcaps are slightly underperforming today at index level, but advanced decline still looking quite good. This is Closing Bell. I am Anuj, and with me is Surabhi. Good afternoon.
Good afternoon, Anuj. It's looking like a good screen today, you'd say, because at least the large cap side, there's plenty of participation. It seems to be building on some momentum that started last week.
No, I think the market's shown enough signs of having made some kind of bottom, perhaps not the bottom, but just like we discussed, Surabhi, these things sort of have a knack of repeating themselves. The small cap space was bummed out, the mid cap space, the number of stocks hitting 52-week lows continuously was making a new high till last week. And then last week on Tuesday, the market sort of gave you an indication that it was breaking down, held an important support mark, has bounced back. So that way I think things are looking good. Good quality names are bouncing back. Motherson Sumi has been your stock of the day. Apollo Hospitals. So Page Industries made some kind of comeback. Ajaria Ceramics, Pidilite is good. So I think after a long time, the last 4 or 5 days have seen some repairing of the portfolios, of the damage of the portfolios that we had seen. That's good news. On the Nifty, I think it's now very clear that this market lacks triggers to either break down below 10,500 or go above, say 11,000. I think that's been the marker. You went to 11,000, 11,100, slipped from there. You went to 10,550, 600. You rallied from there. That's the index range for now, give or take 50 points. You have to play in that range, and within that, the return of mid caps and small caps. I'm just hoping I'm not saying this too soon, but the way the mid caps and small caps have bounced back, I think should give you a lot of comfort.
One money manager sent me a text today saying that the market seems to be betting for a favorable outcome or some shift in the sands in terms of politics and what the expectations are. So I don't know really how much to read into those kind of things.
I tell you one thing, you'll hear a lot on politics between here and up until general elections. Yeah. You have to ignore it because, and most of our bull markets have actually happened and the market actually haven't got what they wanted. So that, obviously you're building in a lot, but let's not talk politics right now. There's a lot to go between now and May. But anyway, let's do one thing. Let's invite our first big guest on the show, shall we?
Okay, we will have the first big guest joining us in the next couple of minutes. Before that, just a quick run-through of what we're doing over the next 1 hour. Of course, the market is trading at the day's high and positive global cues have had a role to play today. But then, of course, large cap names like Infosys, HDFC Bank, HDFC, TCS, all of them driving the Nifty higher. On the downside, there's Adani Ports to watch out for, and Reliance hasn't quite played its part in today's rally. We'll be discussing a lot of this with the experts and yes, the big voice that Anuj was referring to. As the market braces itself for the impending general elections, will it make new highs or will it break earlier lows? What are we watching out for? And beyond politics, what's the trigger for this market? Shankar Sharma, Vice Chairman and Joint MD of First Global, joins us in the next couple of minutes. More voices lined up for you today as well. On the institutional side, we get a word from Shivani Sarkar-Kurian, Senior VP and Head of Equity Research at Kotak Mahindra AMC. And of course, lots of trading ideas will come your way as well with our technical experts, Ashwini and Mitesh. Anuj, I think maybe we can quickly get the trades in before we'll have Shankar joining us.
Yeah, we'll do that in fact. We have Ashwini and Mitesh now joining us for last hour calls. IT really is standing out, by the way. Infosys making fresh intraday highs. And look at TCS now. That stock is surging. Good afternoon, Ashwini. Your thoughts on the IT rally first, and of course your index view and stock calls.
Well, good afternoon. I don't think anything has changed. A week earlier, you were collapsing from 11,000. Was that the top? Now 3 days rally and we change again. That's not how things work. It's basically an uptrend and a downtrend, swinging on both sides. Sometimes mid caps participate, sometimes they don't. So I just want to take it by the day, and if we are in an upswing, keep buying the dips. If in a downswing, keep selling the rallies. That way, nothing has changed. Yes, things which are beaten and bashed up like Apollo Hospitals, that is having some sort of an upside, but again, is that the bottom? Don't know. Apollo Hospital, you can take for a buy. 1170 is the stop, 1220 is the target. Adani Enterprise again, big decline. Now last couple of days it's had a bit of a rally. That's a buy with a stop of 128, target of 140. TCS is a buy with a stop of 1950, target of 2000. Again, it came back towards 200-day moving average, and just because of that reason, it should be bought. So that way, Friday, Bank Nifty down 200. Today, it's up 200. Again, nothing more to go by. Just that if you have a collapse on any index on a certain day, buy into it. If you have a big rally leading up to the upper end of the boundary, try to sell it.
Okay, fair enough. Plenty of buys on the screen for Ashwini. Mitesh, what about you? What are you trading in the last hour?
So I have one buy and one sell. Slightly riskier, but early call in Biocon, where I would want to sell with a stop at 624 for targets of 600. And Cipla is a buy with a stop at 542 for targets of 565.
All right, gentlemen, we'll keep coming back to you. For now, let's invite our big voice of the day, Shankar Sharma, Vice Chairman and Joint Managing Director of First Global, on the show. Shankar, hi, good afternoon. Thanks a lot for joining us. Just having this conversation with Surabhi some time back about how the mid-caps and small caps are giving some signs of bottoming out. You have been a big fan of mid-caps and small caps. Do you think the price damage or the pain in the system is out of the way?
I can't say anything of that sort. This is a volatile category at the best of times. So it's and we have had many such bounces in the past. So I just hope that this is the bottom, but I can't say for sure that this is indeed the bottom. So on this kind of a very volatile small cap space, you can't really ever conclusively say that this is the bottom. What you can at best say is that, okay, so I think stocks have reached a point at which fundamentals are good or bad are fully discounted, and hence we don't see much downside. That's the only call you can take. But on a broad market, to say small caps are bottomed out, I think that would be a little foolhardy.
Okay, in that case, let me ask you a follow-up. In general, do you think the risk reward is in favor to now look at the broader market after the kind of fall that we have seen? Now we have, of course, dispensation at RBI, which is perhaps going to cut rates as well. So perhaps the cost of capital also comes down a bit going forward. So in general, is the risk reward now in favor?
I don't think RBI's moves anyway do much for equity markets in India. I mean, we are not like the Western countries where a move of the Fed necessarily, will have a bearing on equity markets. India is a very unorganized credit market. And the transmission of whatever RBI thinks and does is very poor even in the organized sector. So, in the West, you have people living off credit card debt and stuff like that, where even a 25 basis points cut in overall rate can have big impact on consumer purchases. But here at our current rates, if you're looking at an EMI softening, if your EMI is 1,500 rupees and if you have a rate cut, it might fall to 1,350 rupees. That's kind of impact you're going to look, because overall the base of interest rates is very high. So I don't think RBI's moves do anything to stock market. I think it's a waste of time to focus on RBI and then make a call on where Indian markets are going to go. I think the larger things we need to focus on are core fundamentals rather than just purely interest rates. And particularly remember, these are all small moves. If you have a huge move of the kind of, in terms of downdraft of interest like you saw in 2007, and then you saw a couple of years back, I think 2014 or 15, those are quantum shifts in interest rate sort of structures. Those are the exceptional situations. By and large, on an ongoing basis, small tinkering of interest rates won't have much impact. So really you need to come back to where India is trading relative to the world in terms of fundamentals, where India is positioned relative to emerging markets. And in that space, India, one can't be, again, thumping the table and saying that it's the best of the lot. If you look at just simply the performance of our markets relative to the two other principal markets, Russia and Brazil, India has been lagging. And now, when I opened the screen this morning and I saw China was up for 5 or 5.5%, I thought India would be up, close to 1,000 points. It hasn't done anything of that sort. It might do that. I'm not saying it will not. But India is lagging, and that is a problem. So, one can't say again that India has bottomed out. The fundamentals have become as bad as they can get, because there are a lot of uncertainties out in the future, and we all know what those are. So I'm being a little circumspect. Stock by stock, you might find good value, and I think at least my strategy is stock by stock rather than look at top down and say overall markets are bottomed out.
Okay. Good afternoon, Shankar. Good to have you on the show. So all right, in that case, let's actually get down to stocks and sectors. I don't know if you'd be willing to talk stock specific, but in terms of, hunting for value in this market that has been so range bound last 6 odd months, what pockets excite you right now? We can talk NBFCs, we can talk auto stocks, but where do you see value with underlying growth potential?
I don't think markets have been range bound. I think markets have been very, very down. The range bound part is only 5 stocks in the Nifty, and that's what's making the overall appearance appear to be range bound for the Nifty or the Sensex. But the small cap index, mid cap index are all barring this current rally of the last few days, they have hit pretty much 2 or 3 year lows. So that's a separate point. But there's, as far as I'm concerned, I'm a very, very bottom up stock picker, and I am not interested in really looking at sectors, because the stocks I find interesting are stocks which are not necessarily sector related. So talking to me about those stocks is of no consequence. What I'm more interested in knowing or discussing is, do India's fundamentals merit a rally or not, or do any sectors' fundamentals merit a rally or not? And the sectors you mentioned, NBFC and autos, are not necessarily looking very, very robust right now, because even Maruti, I've liked it. I liked it for I think over a decade. But and I think stock has value, but it's just that the numbers are not really supporting a big bullish case on Maruti. And for the NBFCs, the less said the better. I've never been a believer in that space. I've said it repeatedly, that's a space that has roughly a 5-year cycle. And in 5 years, the companies do very well, and in the sort of the first 3 years they do very well. The next 2 years they lose all, give up all those gains, and they're back to square one. With a bit of a difference being that now you have the NCLT, which is some kind of a threat to companies. If they default, they get taken to that court and all that. That's a change for sure. But that doesn't mean that the sector per se is a good business. So I've never been a believer, and while stocks did very well, and I sat out that rally, but they've corrected very, very sharply. But remember, in all these kind of companies, there is no telling where the bottoms are. And the other thing is, of course, as we have seen in some companies which we thought were operating in a more secure part of the space, like housing finance and all that, we've seen that that's not necessarily the case, that they are necessarily very strong in terms of the balance sheet or the kind of credit they have been giving. So you don't know in this sector, and you can start from ILFS, you can come to Diwan Housing, there are many in the middle. You don't know where the bodies are buried. So that's the problem with banks and NBFCs in general, which is why I tend to avoid them overall. That while going is good, a lot of things can get papered over, but in boom times, inevitably bad assets are created, which in a bear market, come to fore, and which is why we have seen a spate of these problems coming out, starting from ILFS.
Exactly. Since you spoke about that, Shankar, what's your thought process on something like a Tata Motors, where again, perhaps, we're now seeing the downward move play out, on the JLR front, but with the kind of price damage that we have seen, is there something, where there's some value, or you think it's still an avoid?
No, I think we spoke about it a couple of years back, and you asked me, what I thought about it. And I said that was a trade that was born at a certain point in time. We played the trade and we got out, and that's the last time I got interested in Tata Motors. And since then, I've not seen any reason to get back into Tata Motors at all. And, all the subsequent data has pointed to that decision being basically at least a conservative and a prudent one. I don't see, Tata Motors being in any position right now to be able to spend the amount of money needed to compete at the luxury end of the market. And if you see, the models are beginning to age, if you can see, the tech is beginning to age, and this is a game in which you need to spend a lot of capex. And with Brexit, obviously being a reality now, they are suddenly stuck in a situation in the UK where they have a problem, being just simply, competitive. And China, which was a big driver, again, is a problem situation. So I don't see what is the way out. I mean, a quick way out for Tata Motors out of the current problems that they have. So, I mean, they will, I'm sure, they have good management. They will figure out something. But, that's a bit down the road. It's not interesting to us right now.
Shankar, do you see any evidence of a cyclical recovery in the economy? And therefore, would you look to play any part of that in the market now, whether it's road contracting companies, engineering companies, etc., or do you think that's still a bit of a pipe dream?
No, again, remember, I don't think we should try to chase this mirage of an overall recovery in the economy, because I don't think there is enough recovery in the economy from some of the actions of the past. I think we are still kind of seeing a bottoming out process. I don't think we are into a revival phase. But, you took the name of road building companies. I mean, some of them are good. There is enough order flow for a limited handful of companies, because earlier there used to be 30-35 companies bidding for a road project. I mean, I remember 10-12 years back, and now they are down to maybe 5 or 7, while the scale of roads contracts being awarded is pretty okay. So relative to the field of play, which is now 5 or 7 companies, there is adequate business. However, there is a different problem, and that's a problem not just with construction or road building company, but overall infra companies. That credit itself is a problem, and that has come as a result of several sort of events, not in the least being an overall shying away from the public sector banks. Because remember, private sector banks do all the sexy stuff, so they lend to consumers, they have apps and they have stuff like that. But the unsexy part of banking has been left to the public sector banks, and that's where the entire problems lie. Because that business of lending to infra companies to build roads or build whatever else that they are building is a difficult business from a credit angle. And we know that most of the NPS came out of the infra sector going into a tailspin. So banks, having seen that, and now with another sort of psychosis of sort of regulatory action or CBI action, etc., banks in general have become very leery of lending to this entire sector. So even good companies are finding it hard to get financial closure for contracts that they have bid and won. So there is an overall feeling that it's better off not lending. Rather than lending, their loans might go bad 5 years down the road, and then I'll spend the rest of my life fighting a stupid court case. So that fear in lenders is a problem. I don't think the flow of business is a problem. I just think flow of credit to the sector is a problem.
Okay, fair enough. By the way, just keep an eye on Delta Corp. All of a sudden, there's a big move that happened on the stock because the decent quantity which got traded. So that stock right now moving to the high point of the day. Shankar, how do you look at the recent instances? We have had so many instances of stocks going down 20-30%. In certain cases, because of market not liking what promoters are doing. Vedanta was a case in point. We had Z. Today it's Adani Ports. You think it's a reflection of the tight liquidity in the system, or are these isolated incidents? Because they're happening with too much regularity now in the market.
This is happening because we are in a bear market. Long and short of the whole story is that. So in a bear market, all these problems, which have been hidden because of a tide of rising stocks, suddenly comes out. So I think it's just simply a reflection of the fact we are in a bear market, and suddenly the collaterals you gave are no longer worth what they appear to be. Banks want more. You don't have enough money, and there's a whole negative spiral which you are all aware of. But I think the large issue here is that, and I have always believed this, that corporate India is largely a group of very mediocre companies, extremely mediocre companies. They have no real, edge in terms of thinking, in terms of overall concepts, in terms of overall tech. Nothing. We are still doing, go back and look at the history of our companies, look at the Sensex composition. How many new companies have you added to this group of 30 or 50 companies? Almost nothing. They're all static. I mean, a growth economy should be throwing up, big winners who come out of nowhere, create huge models, and sort of disrupt the older guys. We're still old economy. We have cement companies, road companies, construction companies, petrochemical companies, banks. This business has been around for 5,000 years. So that is a reflection of how poor in terms of innovation corporate India is. We are content to milk only the domestic markets. There's hardly Indian multinational that we have created in 25, 28 years of liberalization. Everybody is busy selling to the Indian consumer. Some of them sell at a profit, some of them sell at a loss. And the other group is busy winning contracts from governments at hopefully some kind of a reasonable margin. But we see that the margins don't actually happen once you've created, executed the contract. So it is a larger issue that we still have old economy companies and a country which is so lacking in innovation, cannot hope to have a group of companies created which are cutting edge in terms of tech or some kind of a global advantage. And that is the real problem, that we have just lost out on the race for tech. And the corporate India composition is simply a reflection of that. That is the real problem here.
Well, Shankar,
even your tech companies or your IT companies are hardly tech, right?
I'm going to take quite a few of those points. Yes, why not? We'd love to see an Ola, an Uber, a Netflix and the likes out of India as well. But maybe we wait for that. Though the tech companies might have a different argument to make. They're not on the platform right now, so we can't speak for them. But, just to round things up, coming down to the big P, and that's politics. How significant an event, if at all, will this general election be? Will it do anything to alter the course of the market, even if you're talking index and even if that means 5 to 7 stocks? Is that an event that's going to break this range? How do you view the general elections that are coming upon us?
No, I think it's a significant event and one shouldn't be dismissive about its importance. I think it will have pretty significant effect on the stock markets, particularly this one. The last one was more or less a done deal from the time the campaign started, 6 months prior to 2014 elections. This time it doesn't appear like a done deal, and that is exactly where we will have the market reflecting a very sort of volatile set of data, because on the one hand, you could simply have the current government coming back with a weakened sort of setup, which market might not like. On the other hand, market might say is that, okay, even with the weakened setup, this government is something I like, and I will still go with it. On the other hand, you might have the other sort of coalition coming to power, which we have seen in 2004. The markets didn't like, at least for 5 days. After that, the market loved them for the next 10 years. So it's a pretty sort of significant event that is coming up, and I like I said, I have no clue what's going to happen. I don't think anybody else has a clue either. But whatever happens will be very, very impactful on the markets.
All right, we will wait and watch for that event to unfold. Shankar, it's been a pleasure talking to you. Thank you very much for taking out the time, and we hope to see more of you as well. Thanks very much.